Global markets are navigating another period of uncertainty as geopolitical tensions in the Middle East continue to ripple across equities, currencies, and commodities. Investors are closely watching diplomatic developments between the United States and Iran, with shifting expectations around energy supply, inflation, and interest rates driving cautious trading sentiment worldwide. Asian stocks struggled for direction while the dollar held firm on Thursday as investors treaded cautiously amid dizzying developments in the Middle East, where Iran said it would weigh a U.S. proposal to end the Gulf conflict. The widening war has jolted global markets, sending oil prices soaring, reigniting inflation fears and scrambling global rate expectations. It was a mixed picture in Asia in early trading, with Japan's Nikkei rising 0.6% while South Korean stocks fell 1.2%. MSCI's broadest index of Asia-Pacific shares outside Japan edged 0.23% lower and was set for an 8.7% monthly decline, its biggest drop since October 2022. The dollar held firm near recent highs and was on track for a 2% monthly gain, cementing its role as the market's preferred safe haven currency. The latest comments by Iran suggested some willingness by Tehran to negotiate an end to the war if its demands were met. The United States had sent a 15-point ceasefire proposal that was initially brushed aside by Iranian officials, leaving investors uncertain about whether diplomacy would succeed. Analysts said markets were struggling to interpret conflicting signals. Chris Weston, head of research at Pepperstone, noted that while headlines appeared more constructive, traders remained unsure which developments to trust, with price action suggesting expectations of further twists and turns even as chances of negotiations improved slightly. The near-month-long war, triggered by joint U.S.-Israeli strikes on Iran in late February, has effectively shut the Strait of Hormuz, a vital conduit carrying about one-fifth of global oil and liquefied natural gas flows. The disruption has pushed oil prices sharply higher, with Brent crude trading around $103.35 per barrel, up 1% on the day and on course for a 42% monthly surge. Market strategists warned that reconciling the objectives of Washington, Israel, and Tehran would be difficult, reinforcing expectations that energy prices could remain structurally higher for some time. Rising oil costs have revived fears of an inflationary shock, prompting traders to price out the possibility of a Federal Reserve rate cut this year and strengthening the US dollar. While expectations of rate hikes briefly gained momentum, those bets have since eased as investors assess the broader economic outlook. European Central Bank President Christine Lagarde also signaled that policymakers could raise interest rates if prolonged conflict drives inflation higher across the Eurozone, saying a measured policy adjustment could be warranted if price pressures overshoot targets. In currency markets, the euro was little changed at $1.1562, while sterling traded near $1.3358. The Japanese yen hovered around 159.43 per dollar, close to the psychologically important 160 level that traders view as a potential trigger for government intervention. Commodity markets reflected mixed risk sentiment. Gold rose modestly to around $4,537 per ounce, although the metal remains on track for a steep monthly decline, marking its largest drop since the global financial crisis in 2008. With diplomacy still uncertain and energy supply disruptions unresolved, global markets remain highly sensitive to headlines from the Middle East. Investors are likely to stay cautious in the near term, as the balance between escalation and negotiation continues to dictate movements in oil prices, currencies, and broader financial markets.